Coming up today, stocks continue to bounce back. The bears starting to change their mind. Google shares go parabolic. Could oil be about to crash? The latest from the Fed. Crypto having its worst month in years. One of the hottest stocks from today. And how the AI boom is on its way to being fully unlocked. This is massive, guys. Let's go. And welcome back, guys, on another bullish day for the market. On this shortened trading week, US stock market will be closed this Thursday for Thanksgiving, and Friday will be a half trading day. Market's closing at 1 p.m. We're seeing a pretty good bounce this week after elevated fears last week going into the weekend. See my S&P 500 oscillator went into oversold territory, briefly went into risk-off mode here on the chart, looking at a number of market internals, but we're seeing a strong bounce back to start this week across all indices. The equal weight S&P 500, super strong candle there on the NASDAQ equal weight, printing big volume here today. Once again, the Russell 2000 small cap index leading the charge higher, up 2.1%, regaining its 50-day volume-weighted average price here in the yellow line, with small caps on fire. And so is the dip already over, as we're seeing fear disappear from the market, a big crush in volatility again today. The VIX getting down to 18.5, still quite elevated for a bull market. But apparently the AI bubble burst last week, as I was told repeatedly, because Michael Burry is bearish, the guy that just shut down his tiny hedge fund. And I can't tell you how much mud was thrown at me over the past 2 weeks for remaining bullish, whilst growth assets were selling off, even more so than the heights of the tariff tantrum. But that seems to have dried up this week. Same with most FinTubers out there. They just echo each day's price action, analyzing the noise on the chart, as they can't analyze the key driving fundamentals and stick to a constant narrative. But I'm going to show you a big bullish catalyst that we just got today, along with all the key driving fundamentals and data, along with a few interesting charts, getting a big rally in the retail sector today. 4.5% going into the all-important holiday spending period. Thanksgiving kicking off this week. Some retailers out there do half or more of their yearly sales in the 6 weeks leading up to Christmas. So this is good price action. Same with some good technical moves in the rate-sensitive sectors, like home builders, consumer discretionary, and regional banks as well. Gap up and go today, clearly above the 50-day VWAP. And so we've got quite a few bullish catalysts right here on our doorstep and continuing into next year. Rate cuts, Fed liquidity, the war about to end between Russia and Ukraine, China trade deal reopening trade between the two largest countries on earth, crypto market structure bill passing, people getting large tax refunds from the big beautiful bill, really good earnings momentum, jobs market not falling off a cliff, along with potential new stimulus coming, plus the Genesis mission just being announced that I'm about to get into. But alas, fear is still elevated, with the bears really coming out of hibernation these last 2 weeks. We can see that in sentiment surveys, and even after this strong bounce past few days, we've still got the fear and greed index in the extreme fear zone, which is quite amazing how persistent pessimism and fear has been throughout pretty much this entire bull market. I think it's the most hated bull market in history. A lot of people so upset and annoyed by it, they want it to fail. And we were seeing some records last week. Put options, people shorting ETFs, fund inflows into bearish ETFs, especially crypto stuff, hitting records and elevated fear. All of that normally produces really good forward return from those spots of peak fear. Shakes out a lot of weekends. But for those of us that can look past month-to-month results in our portfolio, they're actually a gift and great opportunity to buy the dip. However, there's literally millions of people out there that base all their opinion and views just on the last couple of candles. They're completely hypnotized by the daily price action. And we're even hearing from some perma-pessimists like Ray Dalio not to sell stocks, even if you are worried about an AI bubble. And because on many measures, we haven't seen those peak euphoric levels that we normally see at market tops. One of them being blow-off tops in the amount of new IPOs, companies coming to market, like we did before the last bear market started in late 21. A lot of stocks and market breadth rolled over in mid 21, along with a peak in IPOs. So it's good to see IPOs uptrending, but we still haven't even taken out anywhere close to those 2021 peaks yet. Plus, we just got one of the most bullish things ever to hit this bull market, in my opinion, and that is the launch of the Genesis mission. As I've been saying for a while now, many people out there are underestimating the potential this current US admin has with unlocking America's full potential and accelerating American exceptionalism. And with the launch of this new strategic initiative, this changes everything. Let me explain it to you, as I know there's plenty of pessimists out there who will never support their current admin under any circumstances. But a president launching a modern-day Manhattan project for AI and turning AI data centers into national strategic assets is one of the most bullish signals you can possibly get. And so over the past few days, the US government has unveiled the Genesis mission, a nationwide initiative led by the US Department of Energy and supported through a presidential executive order, so they can buy skip all the usual political BS and just fast track this thing through. At its core, the program will build an integrated scientific and computing platform, combining the nation's supercomputers, national laboratories, federal scientific data sets, academic and private sector partner capabilities to radically accelerate scientific discovery through artificial intelligence. Key priorities including advancing energy innovation, fusion, advanced nuclear, grid monetization, materials science, quantum computing, biotechnology, and national security relevant technology. The ambition is to double the productivity and impact of US scientific research and development over the next decade by using AI-enabled workflow to compress research timelines from years down to months or even weeks. From an economic and market perspective, this is super bullish. First, by catalyzing breakthroughs in energy production, computing, and advanced materials, the mission directly supports the growth of high-value sectors. For instance, fusion energy could dramatically lower future energy costs. Advanced manufacturing could raise domestic productivity, and quantum AI platform could create entirely new industry that translates into higher GDP growth potential, stronger corporate earnings, and an elevated innovation cycle, all supportive of higher equity valuation. Secondly, the focus on public-private partnership, unlocking government-held data and infrastructure, and accelerating commercialization. Many listed companies in AI, semiconductors, cloud, clean energy materials stand to benefit from increased demand, new contracts, and accelerated timeline. They're going to do big deregulation and incentivization, pushing all this stuff through at light speed. Signals the US is doubling down on global tech leadership, which enhances investor confidence in US equities and favors sectors tied to innovation, infrastructure, and productivity gain. Long story short, the US government just launched an AI initiative on the scale of a modern-day Manhattan Project, or something similar to the Apollo program. This is the modern-day space race. But instead of going to space or competing on nuclear, they're building a national brain by unifying every major federal scientific data set into one integrated AI platform. Taking all the existing collaboration and partnerships the US government has been doing with mega-cap tech to a whole new level. The US is essentially centralizing artificial general intelligence development and shifting the frontier race from private labs to a state-level backing. I think this signals that policymakers believe we're now inside the AGI window, where coordination, compute sovereignty, and national security matter more than corporate competition. It's a geopolitical pivot. The US is fusing national labs, supercomputers, and frontier AI firms to ensure America doesn't finish second in the global AGI race. The economic implications are massively bullish for tech, innovation, liquidity, and even Bitcoin. Everything now accelerates from here. The US wartime economy is now in full swing. Expect a flood of liquidity and broad mobilization of industry and defense to upgrade the power grid and accelerate every facet of AI development, including financial backstops and red tape removal, to win the race that not only America but the West cannot afford to lose. With China hot on our heel, looking to go beyond copying our technology and even out-innovate us. So the largest capex cycle in US history is now likely to accelerate. These big headlines we've been getting, like this one from Amazon yesterday, I expect to show up a lot more now. Policymakers will allow both the economy and inflation to run hot, while simultaneously deploying targeted support to productivity and broader relief measures to contain social unrest, as a lot of people do still struggle with structural inflation. But time is of the essence. Current admin has the full support of big American technology companies. And with Trump soon to gain full control of the Fed, this will all help to execute this strategy effectively. And so I've just created this visual graphic to give you guys an idea of some of the stocks that are likely to benefit from this new massive government-backed initiative, which the bears are just going to keep arguing is just one big financing roundabout. They don't see the big picture nor the competition with China. It's much better for the entire country, industry, and even the companies themselves to join hands to share tech and infrastructure costs. Better for everyone. And so even though plenty of these companies have already been doing well, I think it could broaden out to new industries as well. As the Genesis mission is basically a government-backed AI super platform. So the first obvious winners will be the AI infrastructure and chips. Then of course cloud and data center providers, including REITs, which haven't really run hard yet, Digital Realty, and a few others. Then you've got layer one of the whole AI boom. None of this stuff runs without energy. So expect to see more big deals and investment in power, the grid, utilities, nuclear, and then that'll broaden out to those scientific and industrial. Expect to see big breakthroughs in health, advanced manufacturing, and then of course as we move closer to AGI, quantum computing, and robotics. This all ties in together. Every company can benefit, even the old school blue chip name. And one of these stocks that's already been on a tear, Alphabet Google, after finishing up 6.3% yesterday, slapped on another 1.5% today on really big volume, hitting records in the amount of value traded in its shares as it's getting a bit of a pile on now, which is always funny to see these memes play out in real life. We see it time and time again. Same with FinTubers. All they know how to do is tell you what's happening on a chart and just let nothing but price action determine their decision. But when you understand the fundamentals you can marry them with the technicals and unlock much better opportunities and learn to think outside the box. And just as we've been noting all year, Google had already been leading with its AI chatbot Gemini, in addition to all its huge potential. And so in pretty much the space of 6 months, we've gone from a widespread narrative that Google search is dying, GPT's eating their lunch, etc., the stock's going down with these negative headlines, it must mean it's over, to now a new narrative. Alphabet is the best Mag 7 stock to own. In addition to Berkshire Hathaway, Warren Buffett's company making its 10th largest position in their portfolio. Department of Justice dropping their case. Gemini 3 beating every model out there, even securing a cloud contract with NATO. Now on their way to 1 billion monthly active users in Gemini. Search revenue still growing, double digits. Cloud growing, 34%. And now the street waking up to their huge potential to TPU chips with even Meta, the owner of Facebook, Instagram and WhatsApp, in talks to potentially use Google chips to challenge Nvidia. I think a lot of people don't realize how many categories Alphabet, Google operate in. And this is just unlocking heaps of new potential. Me personally, I think YouTube should be valued at just 1 trillion, let alone all their other categories. Search, cloud, robo-taxis, and now TPU chip. Current market cap on Alphabet, 3.9 trillion. Nvidia, 4.5. It's a very good chance Alphabet Google could become the world's largest company for the first time, maybe in weeks, if not months. As the success of Gemini 3 continues to ripple across the internet, even hearing from big-time influencer Mark Benioff, the CEO of Salesforce, a massive tech company, saying he's used GPT every day for 3 years. He just spent 2 hours on Gemini 3 and he's not going back. The leap is insane. Reasoning, speed, images, video, everything is sharper and faster. And if you haven't already, I encourage you to check out Gemini 3. It really is great. I'm finding myself using it a lot more as well, as I regularly use GPT, Grok from Musk, and also Gemini. I don't like to rely just on one chatbot. But like I said 6 months ago, it was a no-brainer to me to see one of the world's most high-quality company growing healthy double-digit in the middle of a bull market, trading at 16, 17 times the next 12 months earning. We may not see that again for years. And even today at 28, after this massive re-rating from the market, it's still not all that expensive. But of course, I'm not buying more shares up here as the whole market piles into it now. If anything, maybe a good time just to trim a few, take a little profit and recycle it into something else. But long term, I'm still super bullish on Alphabet Google. I think they're kind of the cornerstone of not only the internet, but AI as well. Kind of like the bread and butter of the digital world. Interesting to see. This may be affecting the prices of some other stocks today on this news of Meta potentially partnering with Google for TPU chips. We saw Nvidia and AMD fall today, even attracting the attention of Nvidia, posting today on their X, "We're delighted by Google's success, made great advances in AI, and we continue to supply Google. But Nvidia is a generation ahead of the industry," which nowadays means about 3 or 4 months. So seeming to come out in defense, recognizing Google's big leap forward, Gemini 3 now running on TPU, which is great to see. Some healthy competition for sure. Moving on, JP Morgan says oil prices could crash by more than 50% in the next 2 years, which, if true, is super bullish for the economy and market. Still the biggest input into the economy, the biggest price variable that highly correlates with inflation. You imagine if oil goes down, along with productivity gains from AI, we could be on the cusp of deflation, which could bring rates back down to 1%. So not only is there structural declines in demand from oil due to the growth in clean and renewable energy, wind, solar, uranium, battery, but also the world's still flush with supply. The Middle East is still pumping it out, along with Russia and continued growth in North America as well, which still hold vast reserves. JP Morgan thinks a big structural imbalance between demand and supply is going to persist for several years, and that's the biggest impact on commodity price. And just looking at the daily chart of crude oil futures, it has been persistently soft in this downtrend, trading around $58 a barrel. I think it's like another form of stimulus for the economy and market, because we just go out to the weekly chart. Remember, it was back in 2022. The market was already feeling the effects of huge stimulus and Fed liquidity causing structural inflation. Add on top of that what we saw in Ukraine, that just spiked oil further, added even more pressure to inflation. The Fed had to hike rates, and that really created growth assets in 2022, many of which have yet to recover those highs. But the Biden admin counteracted that by releasing a ton of oil, the National Strategic Reserve, taking it down to 40-year lows, and that somewhat relieved pressure on the market, along with business and consumer spending. But the world's continued to pump it out, and it's been somewhat in a structural downtrend, trying to find support around the mid-50. And remember, that's another key mandate for the current US admin. They want lower rates, they want a lower dollar, they want lower oil. They're really trying to light up the US economy. And this is another key factor in doing all that. And so as we approach the end of the year, I think it's safe to say tariffs didn't spike inflation like we were told they would, even by Jay Powell. In fact, the Fed just came out with a study last week showing tariffs actually lower inflation. And so we're continuing to get measures that inflation is under control, somewhat consolidating. Other measures has been coming down. It's really just services holding it up, which aren't really affected by tariffs. Tariffs affect more goods coming into the country, and that's actually already affected import coming down, America becoming more self-reliant, helping to renegotiate trade partnerships, all in America's favor, attracting trillions of dollars of new investment at the same time. Like I said, we've got big domestic and foreign sovereign stimulus coming into American market, and that's showing up in the real-time data. Trueflation tracking at 2.37%, which is a pretty good level. And on top of still mixed signals from the jobs market, got the September jobs report last week, actually came in with a surprise increase, but we're in the dark on October. We won't find out till after the Fed meet on November's number. But looking at some other measures, private payroll losses accelerated. And so we're hearing from quite a few Fed members actually calling for large rate cuts, even talk about a 0.5 point cut. Can you imagine that next month? Gone from a week ago to there's not going to be any cuts to now some Fed members calling for a large cut. And even those hawkish Fed members pushing back on wanting to cut rate. Some of them even trying to talk down the stock market as they coincidentally happen to oppose Trump as well. Some of them are starting to say they're okay with the idea of a rate cut. San Francisco Fed president acknowledging the vulnerable labor market like it has been for months. They could have done this months ago, but Jay Powell and a few of his cronies kept pushing back and said, no, inflation's coming from the tariffs. Even though they've always been data dependent, all of a sudden they started speculating on what inflation may do, much to the dismay of the US admin. Now, of course, it's too hard to deny the data that inflation didn't show up. The jobs market has actually gotten weaker, so they're pretty much forced to cut now. And that's exactly what Fed fund futures are pricing in a big way. 82% chance we do get a rate cut next month, with a few more priced in next year as well. And we've just seen a big jump over the past day who Trump will nominate as the next Fed chair. I think we'll hear that potentially in the next couple of weeks. Kevin Hassett, big time Trump supporter, believes in lower rates, and also a former Coinbase advisor. He's big on Bitcoin as well. So he's the lead runner. The first time I've really seen a person jump above 50% odds here on Polymarket. Plus, we keep hearing hints from the admin of potential stimulus. Scott Bessent saying Americans will start to see a massive increase in their income soon. And I think that's a big issue they're going to address in the coming weeks and months into next year, especially going into the midterm. They're going to lend a helping hand to those lower and middle income consumers still struggling with structural inflation created in the previous 4 years. And so that to me is all bullish for crypto, which generally correlate with liquidity and rate. But right now we're seeing a huge divergence between risk-on growth assets and crypto. NASDAQ not too far off highs. Bitcoin is off 35% highs, along with many other growth-sensitive sectors out there. But we continue to hear more and more bullish news, including pro-crypto state Texas becoming the first US state to buy $10 million in Bitcoin for its strategic reserve via BlackRock's IBIT ETF. Pretty cool to see a US state buy the dip in Bitcoin. Potentially part of all that volume we saw late last week in Bitcoin ETF, hitting records ever since they were launched. Along with my technical indicators firing off there on Friday. Like I said on that day, I believe it was a good buy the dip opportunity in crypto and Bitcoin, but it's never just a straight line up. Don't be surprised to see a retest, and that's how we get those double bottoms and bullish divergences on the chart. But what's also looking good to me, in addition to crypto, is small cap and mid cap stocks. Some really good moves out there today, including one me and my Stock Picks members own, Symbotic, up 40% today on blowout earning. And they're a big supplier to Walmart. They're involved in warehouse automation, which is undeniably the future for how companies handle physical product. Human workers are on the way out of factory. But now Symbotic just came out and announced they signed Medline as its first healthcare sector customer, as the company's been heavily reliant on Walmart. And so not only did they beat on expectations, guided up, announced a new customer, the street has quickly increased their price target for the stock, recognizing this really important acceleration of their fundamental, which helped to drive further gain in our Stock Picks portfolio today. And we've still got a few others that have yet to have a big bounce back, including iron. Even after this big pullback, we're still up 183% on it. Same deal with Idaho Strategic Resources, seeing a big pullback in these key sectors, but we're still up 125% on it. And we've actually been seeing some big moves in small cap healthcare stocks, including another one in our Stock Picks portfolio, Personalist, which are involved in early cancer detection. Another one of our great performers in our Picks portfolio, up 172% since I shared it with members and bought it for myself, like I always do. And so with the bounce back this week, Stock Picks portfolio is reclaiming some lost ground, up almost $3,000 for the week. Proud to say the Sharpe ratio still comfortably sits above 1. That's a measure of risk-adjusted return. The market average is about 0.3, 0.4 in the long term. And this bounce is with almost 8% of the portfolio currently sitting in cash, as we sold a few positions this month that hit our trailing stops. All that cash will be reinvested equally across all open picks on the first day of next month, as per our strategy rule. But this is all just short term. Long term, we're still significantly outperforming the Vanguard Small Cap Index, with the portfolio up 48% and time-weighted return. And so, like I said last week, it was a great time to buy the dip. Congrats to all those that did. It's still not too late. I believe 2026 is shaping up to be a massive year for small caps that my stock picks portfolio focuses on. And with the announcement of this Genesis mission, rates set to go lower, earnings growth to accelerate next year for small caps, this is still a great opportunity to buy the dip in small caps and in my stock picks premium service. I send out a deep dive research report every Sunday straight to your inbox, and then personally buy the stock in my own account the next day with full transparent performance tracking inside the private members area. You can see all my current open picks, links to all the research, and be a part of one of the greatest growth narratives of our lifetime. And if you'd like to jump on board, now is your chance to do so and lock in a permanent 30% saving. Click the link below this video, visit my site clickcapital.io and use promo code BTFD30 at checkout and jump on board before this Cyber Week sale closes soon. That's all for the Daily Market Review today. Thanks very much for watching, and I'll see you back here again this time tomorrow. Cheers.